Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Steve Penny from the silverchartist.com. Steve, thank you so much for joining us today on Liberty and Finance on this live stream.
You bet, Elijah. Thanks for inviting me on. It's a good time to be talking. Sometimes it's more fun when prices are going up, but I think this is a good time for us to have this conversation.
Definitely. Now, we saw silver drop the last few trading days, and now it's just 23.50, 23.25, somewhere around there, and then gold is around 17.25. This is quite a drop from just last week. What do you make of this really precipitous decline we've seen?
Well, for a few weeks, we've been trying to take a cautious tone, saying we were vulnerable or susceptible to a sharp sell-off. However, I didn't expect it to be quite this sharp, to be honest with you. Our downside targets in silver were 23.75. And then I've been saying for, about 4 or 5 weeks now, I thought 22 was an outside possibility. Well, the low last night on this Sunday evening smackdown, or whatever you'd like to call it, was $22.29. So we are sitting just above some long-term support levels. We're oversold. So I think we're due for a bounce. But whether the lows are in I'm happy to talk about that, but I think that's where we are now.
Definitely. So definitely not a technical level. It was seeming like the charts were looking weak in your perspective. On a fundamental level, what do you think is driving this?
Yeah, that's a really good question. So what started this was the payroll jobs report, the BLS data that comes out the first Friday of every month. And for those of your listeners who may not be familiar, the two most volatile news events for the precious metals sector are, number one, FOMC meetings, and number two, the jobs report that comes out the first Friday of every month. And that's what triggered this last Friday. The jobs number was better than expected. And we heard some whisperings from the Fed that perhaps they're going to consider raising rates earlier than expected. So that's what's putting pressure on the metals now. And how that narrative unfolds here in the next few weeks is going to determine probably the short-term price movements.
I think that's so key, really, to keep an eye on the price and your perspective on then how far it could fall, because you had mentioned the 22 level is kind of a outside possibility.
Yeah. If you asked me 2-3 weeks ago, I would have said 22 is about the worst possible case scenario. Well, now that we've fallen this far, I mean, we are due for a bounce here, but the question is going to be, the big test is going to be what happens when we bounce and test the first resistance level. That will tell us whether this is just a dead cat oversold bounce, or if we're going to come back and retest the recent lows and perhaps go lower. So, by falling this far, this fast, it has opened up the door towards the potential for lower prices. I do think that's unlikely. I think we're much closer to a bottom than a top, but predicting if we're going to go just a little bit lower is really hard, and it's really hard to say at this point. I think the odds are that we've probably seen the worst, but I do keep the door open to slightly lower prices.
Many of our viewers right now are stacking silver kind of for the long term, right? So in your opinion, now we can't give financial advice. Everyone has to make their own decision and do their own research. In your opinion, though, do you think like right now is a good time to dollar cost average, or wait a little longer?
I do. So I can tell you what I personally do. There's different strategies. I think we've talked about them on your show before, but I like to dollar cost average with physical metal. So I buy a little bit each month. And then when we get these sharp sell-offs, I'll just up the amount that I buy each month. So that's what I'm personally doing. And then when it comes to the mining stocks, you don't want to try and catch a falling knife, but my personal approach is to scale in on weakness. And I think we're at very attractive levels here for the mining stocks, if you have a long-term time horizon.
Definitely. I think a long-term time horizon is key, especially with the mining stocks, because they are so volatile. But if you wanted to share with our viewers some of the charts, maybe of gold and silver, and where we are on a technical level right now. Again, we're with Steve Penny of the Silver Chartist for those just joining us.
You bet, Elijah. Let me go ahead and share my screen with you and just confirm that you guys can see my screen. You can see my screen, right?
Yep, perfectly.
Okay. All right, excellent. Yeah, so we'll start by just taking a look at the chart for gold here. And I mentioned the levels for silver, but I didn't mention gold. And 1675 has been the key level to watch. That, just like silver, the outside possibility was 22 that I've been saying for a while. Well, 1675 was that key level for gold. And you can see how well simple technical analysis really works here. We had identified 1675, and where did price stop on the sell-off today, or last night, I should say? Well, the low was 1677. And you can see here coming up to this RSI, that's a measure of how oversold or overbought something is. So we are getting extremely oversold, and we came down and tested this key support level. So I'd look for 1675 to hold. And that is really a critical level, because if 1675 gives way, that opens up the door for another $100 plus of downside. I don't think that's going to happen, but we should be mentally prepared for that.
And on silver's level, where does silver stand right now?
Sure. And with silver, why don't I start with I like to go big to small. So we'll start with a longer term chart of silver. This goes back about 10 years. So these are monthly candlesticks. And this shows the big 49.82 high of back in 2011. And for a long period of time, you could clearly see this very strong support at $22. So that's where we tested last night, right? And you can also see this symmetrical triangle pattern right here. And each candle here is a month. And we managed to close the month of July just back within the confines of that triangle pattern. But once price gave way, it fell like a rock. And here we are sitting just above this longer term arc pattern that you can see right here, just above $22 support. So again, just to reiterate, I think the path or the most likely scenario is that we've probably seen the lows. However, I don't rule out the possibility of another sharp pullback towards 18 or 19. And before the call, you and I were talking about manipulation. And I absolutely believe that silver is probably the most manipulated market on the planet. I don't blame every single sell-off on manipulation. However, I try and view these markets through the lens of the bankers. And you can look at the Commitment of Traders report each week. And when you look at gold, especially, there's still room for that COT to improve. And if I'm JP Morgan or one of these big bankers, bullion banks, I've got plenty of incentive to try and engineer lower prices, especially in gold. And let's go over to the daily chart. So this is a little bit more of a shorter term view. And you can see this massive sell-off from Sunday evening into Monday, came down and tested $22.29. Now we did leave this long wick below hand, just below. So you can see that right here. And whenever you have a wick like that, that shows buyers stepped in. A lot of buyers came in, saw this deep sell-off, and they bid the price back up. Now, what I was hoping for would have been a green candle today. I mean, if you had this big sell-off and then actually closed green, that would have been given a lot of confidence that we've seen the lows. But as far as initial support, $22.29, that's the low from last night. That's initial support, and I'm looking for that to hold.
So what is your perspective then on the bounce that we've seen from the lows, really in both gold and silver?
Well, like I said, the first test is going to be when we come up to the resistance level and see how we do there. So on silver, you've got this pretty clear downtrend channel right here. So if and when price comes back and back test the upper rail of this downtrend channel, let's see if we can get through there. If we can get through there, then the next target becomes this 200-day moving average. And I think I've said this before, but that 200-day moving average is really, I think, the most powerful indicator that anyone can put on a chart, because it's the most used input to these institutional trading algorithms. And it's one of the reasons I was so suspect that we might get, some manipulation here, because I know how these bankers think. When we see price sitting just above this 200-day moving average, they know that if they can engineer selling and get price to close sharply below this 200-day moving average, it's going to trip those algorithms, the momentum chasers, those algorithms into sell mode. And that's sure enough, that's what happened. We lost the 200-day moving average here, came back and back tested it, failed, and then we got the big sell-off. So look for the first step towards a technical reversal will be reclaiming this 200-day moving average that you can see right here.
One of the interesting things is you mentioned earlier in the interview, and again, for those just joining right now, we're with Steve Penny, our good friend from Silver Chartist Report, silverchartist.com. And Steve, you mentioned earlier in the interview about the fundamentals, why we're seeing this price drop right now. Some of the fundamentals, one of the things is, a greater outlook, I guess, for rate hikes from the Fed, thinking that the Fed might raise interest rates soon. Your perspective on that, because I know you've mentioned before that really back when we saw the first rate hikes, from the Fed in December 2015, that was the bottom for gold. So it's not necessarily a bearish thing for gold for the Fed to raise rates.
Exactly. One of the major lows going back for decades was December of 2015. Now, longtime precious metals investors will remember that from 2011 to 2015, that was the real bear market right there. And silver fell from 48 down to about $14. And what's interesting is that leading up to that major bottom, the market had been anticipating rate hikes, and that's what drove that bear market. But guess what happened when we got that first interest rate hike, the first of several? That was the bottom. It marked the low. So we had rising rates with rising metals prices. So if and when the Fed does eventually start to raise rates, they're going to be behind the curve. They're going to be behind the inflation curve, and that's not necessarily a bearish thing for the metals. It's the prospect of rate hikes. So leading up to that first rate hike, that could continue to put pressure on the metals, but rate hikes are not something that we should be afraid of.
No, it is interesting what we've seen in the last week or so, and actually for longer, we've talked to Lobo Tigre about this disconnect we're seeing between real interest rates and gold. Normally they trade in reverse. Actually, this week, this last 7 days or so, we've seen real interest rates fall and gold fall. So why do you think we're seeing this disconnect from the relationship that normally is there?
Yep, great point. So on the surface, we would look at headline inflation, which I think is 5.6 or 7%, the last number we got. So that's very high inflation, the highest in a long, long time. And then you look at the nominal yield on the 10-year Treasury note that's been falling. So that's negative real rates. And you'd say, well, why isn't that good for gold? Well, I think it's got to do with forward-looking expectations. And I'm talking about general market participants here. I think your listeners probably think differently. But, the average investor, the generalist, tends to think that inflation has peaked and that rates have bottomed. So they're anticipating this gap between rates and inflation to narrow. They're looking forward. And, I believe they're wrong over the longer term, but that's why it's putting pressure on the metals right now. It's that forward anticipation.
That's so interesting, that forward anticipation, just as we're speaking also about the Fed maybe raising interest rates. Right now, that might be bearish for gold, but once they do, that then it might be bullish for gold, which is so counterintuitive. But again, we're with Steve Penny from the Silver Chartist. For those just joining right now, I guess as we're seeing this pullback in the metals, as we're seeing the sell-off, this manipulation, whatever you want to call it, we have actually a link in the description of this video, kind of giving all perspectives on, well, is this manipulation? What is precious metal manipulation? Does it happen and stuff like that? But as we're seeing this occur, how are the mining stocks holding up?
So as you might expect, the mining stocks have sold off more than the metal themselves. And I think the mining stocks are more oversold, and they're probably, they've probably got a more favorable risk reward setup than the physical metal at this stage. So to break it down too, you can look at senior mining stocks, gold mining stocks, and the silver miners. And it's actually, as you might expect, the more speculative components of the mining sector that sold off the most. And I think for people with the proper risk tolerance, I mean, these things are very risky. But I think the asymmetry is there in the junior silver mining stocks right now. That's where I see the best, most favorable risk reward setup.
And what kind of outlook do you see for the mining stocks maybe going into the end of the year?
Let's see, going into the end of the year. So that's long enough where I'm comfortable to speculate that they'll be higher than where they are now. But the path they take to get there, man, that's a tough one. I mean, I don't want to go on record and say, hey, like 100% we've seen the low. I mean, there is some downside risk in the mining stocks. I just think that it's small relative to the upside potential, especially if you have a 2 to 5 year time horizon. I think this is a fabulous buying opportunity. You don't get, if you still have a long-term fundamental conviction in this bull market and you have a 2 to 5 year time horizon, these sell-offs should be viewed as gifts because they don't happen very often. It's not very often you can buy mining stocks on this cheap of a valuation basis.
I think that's so key, and to have that long-term outlook. Whenever we have you on, we often talk about this, how there are daily movements in the markets that can be kind of shocking, like we've seen in the last couple of days, last couple of trading days, just huge movements in both precious metals. Now, your perspective then on kind of the bigger picture of where we are in this bull market.
Well, from a big picture perspective, I think it's important look, these kind of sell-offs, they hurt, they're no fun. And people, if you're in these sectors, it's very important, I think, to have a deep fundamental conviction of why you're in these sectors. If you don't have that, you're very likely to get shaken loose, and these sell-offs are likely to bother you a lot more than perhaps they should. So this is my ultimate big picture macro perspective on why I'm in this sector, is the federal government and central banks and central planners, central governments around the world are in a situation where they have promised more than they can possibly deliver on. It is mathematically impossible for them to repay their debt, make good on their unfunded contingent liabilities without massive inflation. So they have two choices. They can either default honestly, and which would be massively deflationary, and the blame would fall squarely on their shoulders, or they can print. And we've got a 6,000-year track record of governments doing the same thing over and over. They always choose to inflate and debase the currency, and silver and gold are always the prime beneficiary of this exact kind of environment. So with that perspective, I mean, yeah, I don't like these sell-offs, but they just don't bother me as much as they used to, because I know where this is headed. So that's my 2 cents on where we are.
It's so good to have that long-term perspective. And if you have conviction about the general bullishness of gold and silver, then, these little sell-offs are only, buying opportunities, right? And just an opportunity to stack more, right? Now, I guess before we let you go, kind of one other topic I wanted to touch on is kind of what the dollar is doing right now as well. Your perspective, kind of how the dollar is reacting while we see, the alternative currencies, gold and silver, the sound money falling.
Yeah. Do you mind if I pull up one last chart here?
Definitely. That sounds great.
Yeah. Chart is worth 1,000 words. So let me pull up a chart of the dollar here. And by the way, going back to right here, again, the significance of that 200-day moving average. So the 17th of June, we got this breakout above the 200-day moving average, came back and back tested it. I remember writing in our weekly report, it looks like the dollar could have another thrust higher. And I identified 93.43. That's the previous high as the initial target. And we've kind of carved out this little bullish arc pattern right here. It's pretty clear to see. And that gives us a price target of about 93.43 on the dollar. So we're not far from there. So I think the dollar's got a little bit more upside probably. Now, if we get through 93.43, which I still think is kind of unlikely, you've got long-term resistance here at 94.65. You can see this was the major low back in March of 2020. It was a peak here. So 94.65, I think, is probably about as far as the dollar goes. And of course, when the dollar reverses and starts to trend lower, that's just going to be a tailwind for the metals.
I think that's, again, so key, because as we see all the stimulus that's being pushed out and all the money printing, that can only really push the dollar lower. And that is good for precious metals. I guess really in the long term, that long-term perspective, again, showing, yeah, if it's true that in the last year and a half or so, we've seen unprecedented money printing, that cannot be good for currencies, and that can only be good for precious metals.
Yeah, 100%. And it's important to look at, when we look at a chart of the dollar, to know what you're comparing there is the dollar against, I think it's 6 other currencies, a basket of other currencies. So you could have all 6 of those currencies falling. It's just that one is falling faster than the other. So if the dollar is falling less fast than the other ones, it's going to go up relative to them and give the impression of dollar strength. So ultimately, I think all fiat currencies are losing value. It's just some are losing value faster than others at different times.
Definitely. Well, Steve Penny, before we let you go, did you want to share with the viewers where they can find you online if they're interested in learning more? And actually, they can support our channel as well by signing up for your newsletter. So can you tell us a little bit about that and how people can do that?
Yeah, absolutely. So we have Jeff Clark on our team who, my gosh, I've been looking up to him for years. So I'm just humbled and honored to have him on our team. We just brought on David Brady, who's a great analyst. So we're building a really great team here. We have Patrick Karam, Kevin Wadsworth. So what we do is we put out a free weekly chart pack every Sunday. And the goal is to provide a ton of value for free. And we do have a premium option, but there's never any pressure to upgrade to that, but it's very affordable. We want to serve as many people as we possibly can. So there's a free version, and we did create a link just for your listeners. That's silverchartistliberty.com to get the free report. And if you'd like to join us at any time on the premium service, you're more than welcome to do that as well.
Fantastic. Any last thoughts you'd like to add for our viewers?
No, I think we covered everything, but just grateful that you invited me on. Thank you. And it's always a great time.
Fantastic. Once again, that link for our viewers is silverchartistliberty.com if you'd like to sign up for Steve's newsletter and also support this channel along the way. once again, everyone, thank you so much for joining us for this live stream. Have a great week and hang in there.